Good morning, this is Larry Edelson for my Uncommon Wisdom video update for Thursday, September 23rd. I've got a lot of ground to cover with you today, so let's get started right away. First, a note. Please stay tuned for my colleague Rudy Martin at the end of this video. He's seeing some great recommendations that he thinks investors should be acting on, and he's seeing some interesting things to the flip side of the commodity rallies that we're seeing. So with that, let me get started. But first, I'm also going to get started with the Dow Industrials. Over the last few weeks, I told you the Dow would probably test the 10,500, 10,600 level. It has done that, and now it's even pushing up to 10.8. We have what I call, on a short-term basis, what's happening is a short-term cycle inversion. It's very possible we could see the Dow move up to 11.2 on this rally. However, the longer-term cycles continue to point down. So as high as we go in the short term and as sharp a thrust up we might see in the Dow, be wary that Dow 9,000, Dow 8,700 is still in the cards. The only way I could rule that out would be if we saw the Dow Industrials close above 11,258. I don't see that happening, but I do see the potential for this rally to move up to 11,150. But then, barring a close above 11,258, we should see a sharp fall going into October and November, with the Dow sliding to as low as 9,000. Now let's go to where all the action is, the gold market. Last week I showed you how the gold market closed above its previous record high, and since then it's made one new record high after another. We are now trading at about $1,296, just a hair away from $1,300 gold. This is not surprising. Short-term gold has been very bullish. Intermediate-term cycles are bullish for gold, and as you know, long-term cycles are also very bullish for gold. Now, what is driving gold higher? The same thing I've been warning you about all along. It's just continuing to build up pressure. That is, the Federal Reserve will monetize anything and everything to try and turn this economy around. They said that much again this week in its notes after its latest meeting. The Fed stands ready to pour money into the system, and if you've been following my Uncommon Wisdom columns, the Fed also can do many other things in addition to printing money. It is not out of bullets, it is not out of ammo, not by a long shot. The Fed will do, I repeat, anything and everything to try and turn this economy around. So if the economy continues to look like it's sinking, but select asset markets continue to soar to the upside, and there's a gap between many markets and the underlying economy, don't be fazed by that. That can happen and will happen when you have the Federal Reserve intervening in the markets. Will it change the long-term destiny of the economy? No. But it will change the symptoms and the disease that it has. It could turn a deflationary disease into an inflationary disease. Mind you, you still have a double-dip recession or worse, despite what the National Bureau of Economic Research said earlier this week. But that doesn't mean you have to have a deflationary recession or depression. You could quite as easily have an inflationary recession or depression. Let's take a look now at the dollar itself, which is really getting whacked this week. This is the dollar index chart that I've been following with you all along. You'll notice that last week I said that the breakdown here below this slightly angular uptrend channel was a bearish omen, and sure enough, the dollar has fallen out of bed. We're now at the bottom, reaching the bottom support level of this downtrending channel here. If we should see the dollar index close below this declining trend channel here at any time, the dollar could be in danger of a complete collapse. Now keep in mind, this is what the Fed wants to see. Okay, they don't want to see a crash in the dollar, but they definitely want a weaker dollar. And interestingly enough, in the last 10 days or so, as the Fed was announcing that it stands ready to do anything and everything to try and turn the economy around, what was Treasury Secretary Geithner doing? He was beating up on China to revalue its yuan higher. Make no mistake about it, when they talk about China's currency undervalued, it's the same thing. It's code speak for saying the dollar is overvalued against that currency. So this is another political ploy to devalue the dollar. Every time, I mean every time you hear about China's currency and that it needs to be pushed higher, think, okay, what they're saying is the US dollar needs to go lower. That is inflationary, period. We might not see inflation in the CPI for another year or two, but we are certainly seeing it in commodities. Some examples, sugar up almost 80% in the last 4 months. Agricultural commodities like wheat, corn, soybeans soaring, coffee jumping, even orange juice is flying to the upside, and recently meat prices are starting to take off to the upside. Now, the Federal Reserve is an important factor in all this commodity price gains that we're seeing, but it's certainly not the only factor. The other factor is China. China's economy is cooking. It's firing away on 12 cylinders. It is very, very strong, as is the rest of Southeast Asia. That's where a large portion of the demand for commodities is coming from: China, India, and Southeast Asia. But who is supplying all these commodities to China, India, Southeast Asia? Well, yes, Canada is. Yes, Australia is. But there's an entire corner of the globe that no one's really talking about, where most of these natural resources and commodities are coming from. And with that, please stay tuned for Rudy Martin, who's going to fill you in on some additional thoughts about the commodity markets and Latin America's tremendous growth potential based on its rich natural resources. Stay tuned for Rudy and my video again next week. Here's Rudy.
Hi, Larry. Thanks. I agree. Oil prices are headed higher, and I see many of the same cyclical forces at work in other commodities too. For instance, the end of cheap food is near. Consider the case of wheat. In Russia, production disruptions have exposed how fragile our food supply is. Prices for wheat have shot up 35% year to date, and prices for sugar are up even more. Prices there are up 80% just since June, as the market is focusing on Brazil and its inability to keep up with soaring demand for sugar. And finally, while technically not a food, you can't eat ethanol, it does track corn prices, and corn prices last week are up 7%, which pushed ethanol prices to two-year highs of $2.15. So basically, what I'm seeing here is food inflation across the board in wheat, sugar, corn, and ethanol, and increasing attention being brought to places like Brazil, Argentina, and emerging markets, which are the suppliers of this. So when I look for stocks that are going to make my portfolio head north, I look for markets in the southern hemisphere. Now, this week, I've been watching some stocks in Argentina, and many of them are rising, and one that I particularly thought was interesting was a company called Cresud, ticker symbol CRESY. It has American depository receipts on the NASDAQ exchange, and it's an agricultural company with about 1 million acres of land on 25 farms, and it produces a variety of agricultural products like corn, wheat, soybeans, beef cattle, and milk. Now, in addition to all this ag business, you're getting all this land as well, and at the current prices, that equates to about an acre of Argentine land for about $640, which is dirt cheap. So if you think that real estate prices are headed up and commodity prices are headed up, you're going to get a double bang there. In addition to that, you're currently getting a 2% dividend yield. I find that as an attractive long-term holding, ticker symbol CRESY. Now, in other markets, I'm still finding undervalued stocks in Brazil. One that I'm particularly want to bring to your attention is CZZ, ticker symbol is Charles Zebra, and that's Cosan. It's a beneficiary of both rising sugar prices and increased demand for ethanol. Very recently, just the last couple of weeks, the company signed a deal with Shell to do a joint venture where they have additional distribution capability, as well as, very importantly, access to capital. If you're going to build out the infrastructure you need for ethanol, you're going to need a lot of capital, and that company is going to be a long-term player in that market. Ticker symbol CZZ. So bottom line here is that increased demand for food, especially from Asia near term, increased demand for oil will drive long-term commodity prices up. And I'm seeing really undervalued situations in places like Brazil and Argentina where investors are still underlooking the place. So thank you for watching. Best wishes. Happy trading.